have you considered refinancing or purchasing a home right now while rates are at a historic low? Well, this could be the best time for you. And we have Miss Caroline Moniz with Easy Funding here today. She has over 20 years experience in the lending business and can have all the answers for you. She's quite the expert. So thank you, Caroline, for joining us today.
Thank you, Caroline. We're very excited to have you on. You've got so much valuable information for us today. My gosh.
Thank you. Excited. And, you know, this is actually a lunch and learn. So ladies, what are you having for lunch, Caroline?
I am actually going to go to Miguel's Junior's as soon as we're done and get myself a potato taco.
That sounds so good. I love Miguel's, one of my favorite local spots. Yes. Diana, what are you having for lunch today?
I am having a fruit and acai bowl from the Acai Republic Brazilian Juice Bar, which is right here in South Corona in the Stater Brothers shopping center. So support local businesses, guys. They are doing takeout and get some healthy lunch.
Awesome.
That sounds really refreshing because I think it's like 96 degrees today. So an acai bowl is optimal for that. Well, I am having a seafood enchilada from Rodrigo's, which is a local Mexican restaurant here in Riverside on the corner of Magnolia and La Sierra. So again, guys, support local business.
And in the links below our show, you'll see links to all of those local businesses that we can get out and support. Now is more important than ever. You know, they are starting to loosen up some of these quarantines, but we are still, you know, in the middle of a global pandemic, which is affecting our economy. So really important to, more than ever, to support our local businesses. Oh, and happy Cinco de Mayo, everybody.
Yeah.
Yay.
And happy my birthday month, just saying.
Yes.
Lots of reasons to celebrate in the month of May. That's awesome. Well, you know what? Let's get into it. So we were talking a bit about it, Caroline, and rates are at a historic low. What does that mean for the average Joe and Jane?
Yeah, it really means a lot. So I think a lot of people, you know, aren't aware of how historically low rates are. So we talked about it a little bit. Just 2 years ago, rates were a full % higher than what they are today. So if you have a strong buyer who's got a little bit of a down payment, you're looking at the mid threes. You know, 2 years ago, you're in the mid fours. So on an average sales price and loan amount, that's a savings of about $100 a month. So
wow,
it can make a really big difference. So from my perspective of a lender that's been doing this for a while, we are historically low. I think if you're ready to buy, this is a time to get out there and buy. The inventory is getting there, so we need you guys to keep getting us some listings, right, for our little home buyers. And the rates are still there, and the programs are still there. I think a lot of people don't realize that, you know, the mortgage world is healthy and strong. There's been obviously some changes to make things a little bit better for the lender as far as security, meaning that we have to have a stronger buyer with maybe a better FICO score and maybe a little bit more down payment or a little bit more reserves. But the programs are still there, the loans are still there, the rates are still awesome, prices of homes are still great. So I think it's time to get out there and buy a home.
I love that. And you talk about programs. I know that last time we spoke, you had mentioned a special program for those in the medical field. Can you tell us more about that?
Yeah, definitely. So that's our Golden State Platinum program. And basically it's a grant that's forgivable. They can get up to 5%. Okay, so just depends on what they qualify for. They don't have to be a first-time home buyer. So that's pretty exciting. So if you're in the medical field, law enforcement, paramedic, even teachers and school administrators can qualify for this. Firefighters can qualify for this. So it's a pretty big, broad spectrum of who can qualify for it. It's FICO score driven, right? So you have to have at least a 660 FICO on some of these programs. They can also be tied in with other assistance. So maybe you need a little bit of money for closing costs, but also maybe a little bit of money for down payment. you can kind of tie these into other programs.
Wow, that's fantastic. And I just want to reiterate that it is a forgivable grant. So it's not being added on to your loan, right? So it's completely forgivable.
Correct. So there's two different types of grants. One becomes forgivable after the third year, and then one is completely forgivable. So it's just going to depend on the buyer and their qualifications and kind of which mold they fit into. Either way, it's still forgivable, right?
Right.
So it's free money for those that qualify. Basically, it's the lender's world of letting, our way of saying thank you. Thank you for all those people on the front lines, helping take care of us right now and protect us and getting our families healthy and safe. Small way of saying thank you.
Wow, it's really, really incredible that you guys have taken a step in that direction to really say thank you to everybody. Now, for those that are refinancing, say they bought a home, 20 years ago. Like I know Diana is working on a refi right now. What does that mean for them during this time?
Well, refinances are amazing right now. So at Easy Fundings, we are still busy as ever. We have a ton of refis. We still have a ton of people purchasing. You got to qualify, right? So you have to have a little bit of equity in your home, and you have to have credit that's worthy of it, and you have to have income that supports it. But refinances right now are really, really strong. I'm seeing a lot of people taking advantage of actually shortening their term. Mm-hmm. So maybe they previously had a 30-year loan, maybe in the 5s, and they can get into a 20-year loan into the 3s.
Oh, that is a ton of savings right there.
And if you need about the FICO scores, so yeah, I know a lot of people, maybe their scores, like from what I understand, Chase Bank is requiring a FICO score. I thought I heard 720. Which is very high. Most people don't have that. And I think you told me, Carolyn, the average person in the United States has a FICO of 660, right?
Yeah, it's a lot of people have they think that their credit's not great because they have a 660 or a 680. It's actually really average. We'd love it if everybody had a 720, but life's not always that great.
Let me ask you a question. If somebody has that lower FICO score and they're wanting to purchase a home, I think it's like that whole adage about the gym, right? Well, I have to get in shape to go to the gym. Really talking to a lender before you're getting ready to purchase a home so that you can get your credit straight and get the documents in order that you need. So when you are ready to get that loan, you've done all the work beforehand. And I know for credit that you offer a lot of value in that area for people.
Oh, yeah, I think that any lender who's doing their due diligence, with their home buyer, be it a buyer or someone who's already owning a home and refinancing, one of the things we do besides looking at your income and all of that is really reviewing your credit report to see if there's options of maybe fixing or adjusting or doing a few things to kind of bump you to that next level, because that next level will get you a better rate and it'll get you a better term and it'll get you better cost. So we've had buyers that are just a few points away from being on that next tier, and sometimes it's just the smallest change of their credit, maybe pay down a credit card a little bit, maybe increase a credit limit, maybe correct something on the report that should have been not on there for 20 years but is still showing up. But yeah, definitely we do that. That's part of what we do as part of our service. If we have buyers who maybe have more credit challenges than they realize, we also work with credit repair companies. We have a handful, and they're the ones who can really dig in with that buyer, really get some bad stuff fixed, and then bring them back to us when they're ready to go. But either way, their credit needs to be reviewed by a lender. And like you said, you want to do it before you go out shopping. You want to do it before you kind of get your heart set on something, because you want to make sure that you're ready to go and you're not going to have any hiccups.
Right.
So when someone's taking that into consideration, about how long before you're ready to get serious should you really be taking a look at this?
That's a good question.
Like, how long does it take to repair one's credit?
Yeah. Sure. So depending on what the issues are. So if we've got major credit issues that need to be resolved and maybe some research and a lot of hard work, you're going to be anywhere from 3, 6, 9 months, right? That's really not that long in the greater frame of life, right? You know, if it's not today, but it means December, awesome. It gives you something to look forward to and something to work towards. But I have stuff where it's just literally a simple fix. Maybe we pay down a credit card to below 50% of what their credit limit is because I only need maybe a 5-point increase or a 10-point increase. We can get that done within a week.
Okay.
Wow, it can work that quickly. I'm actually really surprised to hear that because that could be huge for people. Just making a small adjustment that can change things that fast. That's awesome.
Encouraging you buyers out there, like, you know, reach out to your agent, your realtor.
Mm-hmm.
If you don't have one, you're in luck because we are realtors.
We are. And I was actually going to speak to that with the equity. So those of you who are refinancing your homes or are interested in selling it, before you get an appraiser out there, have your real estate agent, give Diana or myself a call, and we can take a look at it and see what the current market value is for your home so you have an idea of what you're looking at.
That's brilliant. That is such a great help for us as lenders, you know, because we're not the real estate professional. We don't have all those skills that you have and the ability to do that research. So we kind of have to rely on artificial intelligence and what the homeowner thinks the house is worth. And we all know that can be really challenging. So that's a great offer, Michelle, to be able to let people know what their actual market value is, you know, and that's just, again, just educating yourself before you take that next step.
Yeah, definitely. We're happy to do it. And it's a completely free service and we can do it virtually anytime. So
how long does something like that take to get done?
Oh gosh, we could do that in under 30 minutes, right, Diana?
Oh, yeah. Wow.
Really quick.
Fantastic.
Really quick.
So make sure you take a look in the show notes for information on that for all of you homeowners that are interested in refinancing, and we'll get you in touch with Caroline as well.
Yeah, okay. Carolyn, we had also talked about when the best time to buy is. I know, like, for me, having just gone through a refi, there was a moment there where I'm like watching the rates, trying to get like half a point, a quarter point. One, and finally, like, it got a little crazy, I have to admit. So finally I just sat down and like actually did the numbers, and I'm like putting myself through all this for like $5 a month, $10 a month, you know, and it just doesn't make any sense when you look at things over the long term. These are historically low rates, right? And I know when we talked before, Carolyn, about the price of homes and the rates, you had some really good input on that.
Yeah, I think what a lot of people, and like you said, they're chasing that, you know, that perfect moment, that perfect rate, that perfect price. And right now is that time. You know, to be honest with you, when you look at historically over the last, you know, from 1971 till today, you know, today, you don't see it any better than today. The last time rates were this low would have been November of 2012. They were maybe about an eighth lower, and it was for a blurb of time, and then it was gone. So as nice as rates are right now, and they're historically low, that can change very quickly. So my whole theory in when is the right time to buy a home, besides it being today, because it's the right time for rates and it's the right time for housing market, but it's when you're ready to buy a home. So you shouldn't chase the rate. You know, that was a really good point that you said, you know, if there's an eighth of a difference in a rate, you're probably, depending on your loan amount, but for example, if you had a $400,000 loan amount and you wanted to get 3.25, but you missed it, and instead you got 3.375, you're only looking at about a $26 a month difference in a payment. So you shouldn't let yourself get too crazy over the minutia, because at the end of the day, you're building your life in your home, and you're building your equity in your home. So there's people who 2 years ago thought 4.5% was amazing, and it was. Now they're refinancing at 3.5.
I had a 5% rate, and I was pretty stoked. So now I refied at 3.1, and I'm even more stoked.
Right, exactly.
Yeah.
And it's hard for people to realize, but there was a time where rates were actually in the double digits.
Yeah.
And that was where it had to be for where our world was at that time, where our economy was at that time. So because of where we're at and because of a lot of reasons, rates are still low. The economy, we are such a huge sector of the economy, right? Real estate and mortgage lending. Besides that, that's where people live. That's where people sleep. That's where people raise their children. That's where they eat their dinner. You know, we are a huge sector of the economy. So with our economy going through all the trials and tribulations that we're going through, being able to have a strong mortgage market is really going to help all of us push through this. So last week, Fed Chairman stated, you know, he's really going to keep rates near zero for the foreseeable future because he doesn't see it to be healthy to increase rates. And he's right, it's not. So until we see things change in our economy, and you know, we're going to see all-time low rates. And
well, that brings me to my next question, actually, since you're bringing up the Fed.
yeah.
What are the experts saying is going to happen? I mean, I know for myself and probably everybody out there, there's so much uncertainty. I'm just like really trying to, where are we going? What's going to happen?
Yeah.
So where I know you're always on top of it, Caroline, you're very educated with this. What are they saying in your industry where
Sure.
they foresee things?
Sure. So what, you know, and I actually just read a couple blogs this morning and a little bit last night as well. So, you know, the greater minds that are out there, their projection is that rates will stay low through the remainder of the year, unless something unforeseeable happens. But that is what the smart people are saying. We are in an election year, so that's going to add another level of volatility, right? For those who are maybe buying a home or refinancing during the last election, the day after the election was done, rates did a big jump.
Oh.
So, yeah, and it was pretty scary, and it was really fast and it was very quick. So we tell people when rates are low, jump on it because it literally is in a split second that can change. Just over the last, so we've been in quarantine now 7 weeks. Please forgive me. It's kind of all running together. Just in that 7 weeks, our industry has, and same as you, has gone through just like enormous changes. But there was times where rates were fluctuating a full % up and a full % down.
Wow.
It was that insane. So we're starting to see the market kind of level off a little bit as far as the interest rate part of the market. I think for a lot of reasons, I think we see, you know, some people getting back to work. You know, we're starting to realize that we're going to be okay. We are going to recover. Our federal government is trying to do what they can do to help us. Fannie Mae and Freddie Mac are trying to help people. Kind of leads me into forbearance, you know, for those who are struggling with their mortgage. Yeah, you know, that's great. Let's actually jump right to that. So we talked about this last time you and I were together. Forbearance does not mean forgiveness. That's the first thing we want to reiterate to all of our homeowners, okay? So if you are in dire straits, you cannot make your mortgage payment and you have to choose between feeding your family and making your mortgage payment, you need to pick up the phone, call your lender, and have a conversation with them. But I'll give you the kind of a simple breakdown of what that's going to mean for you. So if you qualify and you cannot make your payment, and let's say they give you forbearance, which means they're going to pause your payment for 3 months, okay? And Mr. Homeowner now doesn't have to worry about his payment due for 3 months. When that 4th month comes along, and let's pretend our payment was $2,000 a month, we now have $6,000 that's due. And then now we have our next month due, right? So now we have a total of $8,000 that the homeowner needs to pay back to the lender. Now, obviously, if you've been unemployed for 3 months, unemployment is probably not enough, even with a little side hustle, to get you through to make that payment. So you go back to your lender and you say, lender, what do? I can't afford this $8,000. How am I going to pay you back? The lender, and more options are coming up, but currently, as we know it to be true, will take that amount, divide it over 12 months, and add it on to the existing mortgage. It's going to be due, guys. You're going to have to pay it back. It's not going to go away, at least not now. The lender is holding your mortgage, there's interest that's being accrued on it, and eventually they want their money paid back. I think the other thing that I want to point out is that, lenders don't want to foreclose on properties. We don't want your house. We want you to pay your loan. That's all they want, So the forbearance is to give you a breather to get caught up, to get through this time so you can stay in your home and you can continue to live in your home. So just being aware of what each lender does, educate yourself, call your lender, find out what your options are, ask the hard questions. What if, Mr. Lender, in 4 months I can't pay you back? What does that mean? What is my next option after that? It's a huge responsibility to take on, and you really need to be educated on what you're doing. The forbearance, again, is only meant for those who really, 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 really need it. If you can make your mortgage payment, please make your mortgage payment. Don't affect your credit. Don't put yourself into this whirlwind of where now all of a sudden you're so far behind you can't get caught up.
Right.
Yeah.
If you guys have additional questions about the mortgage forbearance program, how it works, give Carolyn a call. She's happy to answer questions, and I'm just volunteering your time here, Carolyn. I hope that's okay.
Of course. We want to educate people the best we can. And it's so hard nowadays because there's so much information being thrown at you. It's hard to figure out what applies to you, what is accurate and what's not accurate, but we are happy to at least point you in the right direction, give you the information we can, just to help people make a better decision.
Right. That makes sense. Okay, well, let's see. We had one quick question, Carolyn, before we sign off here.
Okay.
Rate versus payment. That's a big question because I think a lot of people just don't understand that,
They don't, right? So I think with people who are, we have people who think that the world's going to come to an end and, the sky is going to fall. So let's talk to that a little bit. So let's say we have a homeowner today that's financing a home at $365,000 and they're able to get a 3.5% rate. Okay. That's going to make, on a 30-year term, it's going to make their principal and interest $1,639 a month. Okay. Now let's say the sky falls and values go down. Okay. Almost inevitably, if values go down, rates are going to go up. Okay. So let's say that same house that was 365 drops down to 335, but now rates are 4.5%, because that's going to probably be a realistic situation of what could happen. That payment now is $1,697. So yeah, you got the house for less money, but your payment's more. So at the end of the day, at the end of your 30 years, at the end of everything, it was smarter to purchase the home when the rates were low.
That makes sense. Okay, guys, we are going to wrap it up. Carolyn, thank you so much, lady, for all of your information and your help. We really appreciate you and what you do. Hey,
Thank
guys.
you.
Clearly an expert.
Michelle and I do a lot of work in real estate here in Corona, Riverside, and Orange County. We're very active agents. We're top producers in our area, and we refer our clients to Caroline. She's an incredible lender. If you need somebody, please reach out to her. I use her myself. She refinanced my home. I refer her to my friends and family, and I think that says it all. I think when you are willing to refer someone to the people you love, that is the highest recognition you can give somebody.
That's a huge compliment. Thank you.
And
thank you all for joining us today. Keep an eye out for some of our other stuff. So we're going to have other people coming up. We have Rachel from where's Rachel working? I'm sorry. I know she's an accountant, and I forget what
accountant. Yep.
Yeah. And she will be joining us next week for all of your accounting questions or how taxes are being affected by the unemployment that you may be receiving.
We'll also be delving into PPP as well.
Yes, as well as some of the SBA loans that are available out there and what the implications of that are. So please join us next Thursday for that. Also, we every Tuesday do a watch party for our Saturday's virtual open house. We'd love it if you could join us and ask any questions. We are available for private showings as well. And join us on Saturdays for the virtual open house of the week. We'd love to see you. Please invite your friends and ask any questions that you have during that time. So thanks again for joining us.
Us, hit the heart button or the like button, guys. Preferably the heart button, because we love you and we like to be loved.
Thank you so much, guys. Have a great day.
All right.
Go Red Ribbons.
Happy Cinco de Mayo.
Happy Cinco de Mayo. Bye.
Bye.